Hey guys, so I'm coming to you today because I've had some requests about deeper training inside of the chart of accounts and what that is. Wanted to explain first and foremost what the chart of accounts is and what it does. I'm sure most of you guys have a general idea of what a chart of accounts is, and it's, all the names of your pieces, not your vendors. But let me give you a little bit more detail so we can kind of form that piece in the backside for you. And then I want to give you an example of a chart of accounts that is pretty standard and looks clean. So nobody's chart of accounts is going to exactly look like this. There's going to be some variation to it because your business is a story and it has history, and if it doesn't yet, it's going to have history. So your chart of accounts is going to differ. This example I'm going to give you today is a basis of kind of, so you can get your brain thinking about what your chart of accounts looks like, and then you can come inside the virtual office hours at any other time, and we can actually dig in on this a little bit more for you. So I want to first explain and then show you, and then we're going to talk about a few things regarding this. All right. So your chart of accounts basically is the accounting equation, without getting too accountant-ish, is the accounting equation that is between all the transactions that happen. So in GAAP accounting, there are certain reasons why certain things go certain places. That's how everything is issued. And so you have your assets, your liabilities, your expenses, your income, your equity, those things, and they balance out. So when I say a two-sided transaction, it's because everything that goes into your company, your books, every dollar that you spend through your business is going to have an opposite transaction. There's going to be a plus and a minus somewhere. The beautiful thing about the QuickBooks Online and in this membership is you get answers as to how that works so that it doesn't populate funky on the back end. But as I'm sure anybody has heard, there are horror stories of how it can go really wrong really easily without anybody knowing. So this is just to deepen that little piece of it, but also give you an opportunity to think about it. Inside of your chart of accounts, when it's created, say, by someone that's just having a tax person or CPA run through their stuff for them, a tax person they define what makes your chart of accounts as what's going to file your taxes the easiest. And that's where we differ. That's where people that do the daily accounting, the bookkeeping for businesses differ from the tax person, because that's that link. So many people think that they can skip this middle piece, and you guys get to create that middle piece for yourselves and what that looks like inside the membership instead of hiring someone to do it yet. Or if you have hired someone, then we can kind of have that conversation where, we all know everything's on the right page. But inside of this, the main purpose is for you to understand exactly what your chart of accounts is for your business. And we're not teaching anything new, but I want you to go into your chart of accounts after this training and just look at it. And I'll upload this template at the end so you can maybe print it out and map some stuff, because we can make changes to that. Stuff stays in the same categories, but we can actually pretty it up, or we can make it more efficient is the better word for that, because then it spells it out for that tax person at the end of the year. The thing about the difference between what a tax person would create for a chart of accounts for you, and even some tax agencies that will do the bookkeeping for people for really low cost, but you don't get to see the books. You just go run your business and they just populate everything at the end of the month. That doesn't work, because you have some fluid motion inside your business, and all of you are in here in this membership because you need to know that, you want to know that, you recognize that, and you just want to be ahead of that learning curve and that game, because putting together a tax return is one thing, but knowing what your business is doing is another. So you don't want your chart of accounts aligned solely just for the IRS, because sometimes, and frankly, with this new tax reform, there's going to be a lot of different things that are like moving around and shifting. And so with the 21 items on a regular tax return on a Schedule C, for instance, that you add to your personal tax return, that doesn't help you on a daily basis. That gives you 21 places to pocket all kinds of transactions. And then what happens when you need to know how much you spent on this or how much you spent on that? So when I show you this, you'll see it in just a minute. But Your chart of accounts is a financial organization tool that lists every account in the accounting system. These are buckets, and these are buckets for where your money has to sit somewhere. When you spend it or receive it, it's got to sit in a bucket. And so we are creating those buckets for you inside this chart of accounts. So if, for example, when you rent a car, you record it as travel expense. But if we record just everything as travel expense, then your airfare and your car rental, your lodging, your per diem or travel meals all get lumped into this one bucket. And then if you need to know how much did I spend on airfare last year, you have to sift through that bucket and see what exactly is it doing, where did they go, how much did I spend, and then tally it up yourself. So with the opportunity of having QuickBooks Online and being able to see what we can create in there, we can actually add subcategories. So inside of travel expense, you would have travel expense with a subcategory, which is one level down below that under travel expense for car rental or airfare or travel meals, because those are taxed differently than just regular meals and entertainment. So there's reasons why we do these things, and no standard chart of accounts that just populates in there for you or a tax person put in there for you is going to have the level of detail that you need for your business. Only you can see what that is, and only you can say what that is. So when you look at your chart of accounts, I want you to see, does this tell me the story I want to know? Are there things in here that I may want to know how much each year? Because we can change all these, and it doesn't change it for the tax side of it. It just changes it for your process side, so that you're able to run your business on a daily, weekly, monthly basis for reports and analysis. That's what we're doing inside the membership, and that's what you and I are going to do, checking out your chart of accounts. So before you think this is a heavy, because I know all things accounting are just not always fun, but this is a puzzle piece for your business that you can actually learn from and build your business off of. I'm going to now share this little, let's see here. All right, you should be able to see it now. This is an ideal. I put some time into this and pulled some data of things that I have used regularly for full clients that just seems to be something that needs to be generalized. So inside of a chart of accounts, you can choose to use numbers or not use numbers. I suggest no, only because it's not necessary. The numbers are strictly created for the accountant, for your tax person. That's so they can run to certain accounts quicker, and they don't have to type out 4,000. For 4,000, they can type out product sales income when they were writing it, this back when they were in ledgers. Instead, they would just say 4,000, and they could just trace it back based on those numbers. And then you come to the register for 4,000, you could see the in and out. Tons of complexity in that, and that's what we do not want to have in here. But you don't need to use the numbers. I will just give a little caveat on it. If you choose to use the numbers, it's not just randomly selected. So there's certain numbers that go with certain items. So your expenses are 6,000 numbers. Your cost of goods sold are 5,000 numbers. Your income's 4,000, and so on. So there's reasons for this. If you just were randomly selecting numbers, it wouldn't make sense, because an accountant would look like and just be like, I can't even look at that because I've got to disregard. So let's not even play with numbers. But I do have it here in the event that someone wants to understand what the numbers piece does for them. So your product sales income, service sales income, shipping income, any incomes, this is where you can actually map it out in your chart of accounts to a little more specificity to what you sell. So if it's a product or a service or a piece to your business that you want to track that income, we would build or add an income category for it. So we can add whatever we want, and we can rename whatever we want. We just have to have a method as to why we're doing this. But you have to think the long-term goal is to be able to pull out reports that we want to be able to know what is this piece of my business doing. So that's the end game. These reports are the end game. So as we go down, there are certain items that I definitely class out, like you put a subcategory, and that's what's in this column right here. Everything in this column all the way down, let's see here. There we go. Everything in this column all the way down is a subcategory. So that's why it kind of differs over a little bit, is because it's a subcategory. We would house it, sorry about that, under the officer salary. So then under officer salary, we would have One category would be subclassed as regular pay, one would be taxes, one would be other and bonus. This needs to be on your expenses, because so often we do not pay ourselves as business owners, as small business owners, but we really need to. Even if it's very small, you need to compensate yourself for something, and it needs to be regular. You need to kind of stick to it. So you won't necessarily need employee salary versus officer salary or any of those things. And you may not even need taxes right now or other bonus or regular pay. You can just have employee salary. But the purpose of having the subcategories is that then you can expand on that later. So we're always trying to think down the road here as a business owner. Eventually I'm going to have employees. So if I'm going to take a moment and give myself the project of changing my chart of accounts or mapping it to more efficiency, then let me just go ahead and add these. You don't have to use them yet, but you definitely have them when you need them. Vehicle expenses. So when we set up QuickBooks Online, this is the way that some of the new members that had their QBO created for them are going to have their chart of accounts mimic this one. That's just part of the setup piece that we have. Some of the new members that have an existing QuickBooks Online, we can definitely do, we can talk about this in the virtual office hours, or we can have a conversation around helping to map out exactly what you want this to look like for you. And I can have those questions and say, hey, is this important? Is this not important? And I'll prompt you for that future stuff and just see what is coming down the road, what your goals and aspirations are, because we want this to be ready when you're going to get to that point. So under vehicle expenses, we have as a sub the gas, car payment, lease, vehicle maintenance, parking tools, vehicle insurance. These are things you're going to want to know. How much did I spend on vehicle insurance last year? How much did I spend on gas? How much did I spend on maintenance? Even if you are expensing, or not expensing, but reimbursing yourself mileage for your business, you can still pay for these items in your business. You just aren't able to add that in that category on your tax return. So you can still spend the business money on these, even if you're getting your mileage deduction or mileage reimbursement. You just can't do both on the tax side of it. And most of the time, if it makes sense to travel a lot, the actual reimbursement on the mileage is a better deal. But we will have a further conversation on expanding on vehicle expenses versus mileage later on this year, probably in November, December, because the tax laws did change and we need to make sure that we have an accountable plan, because you can't write off your mileage the same way as it used to be done before. So we can put mileage in there under vehicle expense as a reimbursement, and then it's already set, and then your tax person knows, hey, you already reimbursed for the miles. So I mean, there's little things that we can do with this that they can see that we're spelling out the story and we're giving them the details and we're giving them a little bit of this and a little bit of that. They don't necessarily need every ounce of these categories in order to put a tax return together, but if we don't pull them apart and make them efficient for your tax person, then they've got to go through a series of questions to ask you, what about this and what about that? You're like, oh yeah, that's sitting over here in this category. And so they can't see it. So my take on it is, if we can systemize your business, your chart of accounts for efficiency for your daily use, but also we're bridging that gap so that we have this information available to your tax person so we don't miss anything. Nothing gets missed on your tax return to reduce your liability. You want to be able to have all these expenses utilized, if you use them with your business money. So in order to do that, we need to put this out there so that they know we've already done this. They know that we've already covered this, because they blow through taxes so fast sometimes that they can't catch everything when they only spend, a small amount of time on your business over the course of a year. Very small. Anyways, so let's scroll down just a little bit more. You have a few different items here for like insurance for your business. This is a great one, and here's why. You have many different insurances that you're going to have, and notice vehicle insurance is on its own if you're reimbursing vehicle insurance or paying through your business. You've got your E&O, you've got workers' comp eventually down the road, and you have your general liability. Sometimes your E&O sits in with your general liability. It doesn't mean you have to break it out, but you could still have that bill come in and split those two between the general liability and the errors and omissions. So then you can see how much was my errors and omissions, how much was my general liability for the year. That is detailed, that as long as we are automating the entry point of these bills or expenses or income, we are just telling it what buckets to go into. We can have the buckets we want, but if we just give it one bucket, one general bucket for insurance, that doesn't give us much when we need to find this data. But if we already have buckets created, then we can get the answers as soon as we need them, and we don't have to stress about trying to spend the time to break it out when you've got 500 million other things to do that doesn't serve, bringing in income. This doesn't serve bringing in income, but at the same time, it will help you systemize your process so you're not spending undue time on this. So you need to know how to break these out. We need to have that conversation. We need to make it look better, prettier, more efficient, all the above. Travel is another huge, huge, huge one. A lot of times utilities, looks like I have an extra T in there. A lot of times utilities have water, electricity, other utilities. Sometimes you guys, if you're remote or you're working out of a home office, you may not have those because you're going to get an office deduction potentially. So I mean, there's some of these may apply, some of these may not later on down the road. Airfare, lodging, vehicle rental, meals while traveling, and just an overall miscellaneous travel expense. Those are the ones we talked about earlier about breaking those out. So professional fees is another one that is not widely done this way. Break it out, because inside of QuickBooks, if you just have the standard and you've been operating off the standard, it just says legal and professional. And the problem is then what part of it is bookkeeping? What part of it is admin work? Because your bookkeeping and your admin can sit in the same bucket. What part of it is CPA and tax planning versus attorneys? You don't want to just lump it all in there. You can lump it all in there because your tax return allows you to, but that doesn't help you. So I hope this was helpful for you. I hope you were able to kind of see why we put the pieces of the puzzle together and what can we do to make those pieces better for you. How can we streamline your process? How can we systemize this? What makes it look more functional for you so that when you need that item, it's there, but also so that when you want to know what you spent, you can find that information easily. All about learning what your business is doing on the back end. I will talk to you guys soon. I'll upload this with this module so you can map it. I'm going to put another column on the side so you can actually, is there a stinking fly buzzing around? Yes, there is. Pardon me. But you can actually have a mapping spot. So I'm going to put another column there, and you can print this off and you can map out exactly what you have. And then we can go, maybe we'll export yours if you want to go through the function of figuring out how to see what yours is and then map it to this. Then we can go through and create that as well. So that might be a little pop-in lesson we do inside the Facebook group. So keep an eye on that. I'll talk to you guys soon. Bye-bye.